Greetings. You are now tuned into the vault. Trust Christian, own nothing, control everything. Just want to thank you for tuning in live or listening in the replay. Always appreciate the live listeners for the vault, long time listeners, as well as people that listen in the recording and the replay as well on YouTube. So we just thank you for tuning in live or listening to replay. Once again, always appreciate you all. Once again, this is the Vault Trust Christian No, not to control everything. Today is episode 152. You are exposed, and we're going to be going over some things today. This is actually a very great topic to be talking about, so we're definitely going to get into it. But we're going to start out as we always do with our show from to it is at Tuesdays at 8 p.m. Eastern Standard Time. To come across and just give you all some news that's going on in the week. For all you all that listen to the vault on a consistent basis and are long-time listeners, you all are familiar with Robert Smith, someone that we look at his portfolio, familiar with his portfolio. Robert Smith is a venture capitalist, and he is someone that has a private equity fund that makes money investing in software companies. And so right now, the partners are actually being nominated for top SaaS CEOs of 2019, which is a big accreditation to the company. You all can look into that. Really just talks about them having the actual partners and just credentials for people that are in that space. It's interesting. We got a chance to just really get a lot of things coming through our feed this week, and there's a gentleman that passed away, Jeffrey Epstein, and it's interesting because we looked at this and it was easily a trust situation that came across where a trust was created and 500 a trust was created. They report for $578 million right before his suicide. They said that the trust named two executors and a backup to serve the trust. Um, they say someone that may be surprised that they weren't on the actual trust, but you all can just go look into that situation where someone that was really in a particular situation that wasn't extra favorable, by doing things that not necessarily want to talk about on the show here, but really just really want to talk about how money was moved. You all can see the estate being moved, where it even talks about the lawyers being able to receive $250,000 for their efforts for administering a will. So when you all look into wills or you look into trust, you all can see that there's things called testamentary trust. So upon death, there's certain things that kick in place, and you all can see that this particular style of trust, this is what Jeffrey was using, and for all of his wealth, is still is not stated as completely public. Even with testamentary, sometime in testamentary is traditionally public, but you all can look into this. And literally, it's so funny because talking to a trustee, they said there's a trust that he's operating called the 1953 trust, and I was like, nah, that's actually the name of the trust. So it when we talk about the 1953 trust, that's an actual entity. It's not a classification like whether they call it simple or some type of real estate investment trust. It's not called that. That's the name of the actual entity, and it's really interesting when you all look into how that situation was even set up, particularly with the passing, and now the trust has a will and things of that nature. So, ladies and gentlemen, we're in the fourth quarter of the 2019 year. We're going into the fourth quarter here, and time's a ticking. And there are news reports coming out right now that there's a whistleblower that says that GE is actually short selling. That means that they're selling the stock. They're betting on it going down. Well, if you're selling because you have high profits, you would be. Well, there's the guy that came out, whistleblower, uh, CEO, nearly 200 companies with CEOs say that shareholder value is no longer their main objective. These are from nearly 200 major U.S. corporations. Issues statement with the definition of the purpose of the corporation. Uh, the corporation is reimagined, and a reimagined idea drops the old age notion that the function first and foremost to serve their shareholders and maximize their profits. Clearly, these top 200 CEOs are saying that is not the purpose of the company. Well, when you're short selling, because you run the company, Well, that would be the case across the board. When we say top 200, we're talking the Apples. We're talking the Amazon's Bezos. Apple is Tim Cook, CEO. Bank of America is Brian. We don't know how to say his last name. There's the weird last name. Dennis from Boeing. They have another. I think this is a lady from GM. So these are people that run top major corporations, and they're literally saying that their focus is not to uh, actually focus on shareholders. Now, interestingly enough, they have a full business roundtable statement. Looks rather extensive here, but they say uh, that the shareholders are not the focus. Shareholders are people that are going to receive profits from the money that's being invested through them buying stock and things of that nature. They say that that is not the main objective. So interesting to see. Um, Interesting. We got another visual capital of countries' wealth. Once again, the United States ranks in the top five for top average people around the world for richest people. And it's interesting because Switzerland's at the top, Australia is at above them, the United States is still there. So there's a lot of flexibility where you all look at obviously places that you want to grow your wealth. You know, they're telling you, so if it's a country that has a high per capita of people that are making money in that area, particularly they have Switzerland now. A lot of people have their residence in Switzerland, but they don't actually live there. So you can see that there's a benefit of having some type of residence there in Switzerland too as well. Uh, but, hmm, I think this was an article. Gentleman built an actual carbon company right now, but it's just something to look into. He took uh, less than what he's using carbon emissions as a way to move forward. That's awesome. We're going to get into our episode today, so just thank you for tuning into the news. Some of the news, it seems, places for you to go reference and be abreast of what's going on, particularly sometimes in the private equity market when we talk about Robert Smith and others. It's really just to, really go over the environment that we're in, keep you abreast of different, news breakings that happen. Of course, there's more. We definitely listen to different news publications, but not many. When it comes to traditional news, a lot of them are just citing stories. And when you have the background on the story, then it's easier to follow the stories as opposed to just following the story based off of what's being put out in the public. There's always some further investigation, a little bit keener eye for some of the things that you can see that. So today's episode is You're Exposed, and this was just a great episode to really come out and talk to people because a lot of people they call for consultations, they get a consultation, and then they're exposed. They're exposed that the knowledge base that they already had may not be sufficient. Their work ethic might not be sufficient. So when we say that, we're talking about in trusteeship, ladies and gentlemen. People listen to the vault. This is private trustee training from the vault. As far as when you listen to the vault, it's traditionally trustee training. People that are looking to understand private trustee training, and so that's why they enroll with the vault. If you want to contact us at the vault for private trustee training, it's Christian@trustchristian.com. Once again, that's Christian@trustchristian.com. So when we talk about You're Exposed, this may be a little sensitive topic for some people because when you're exposed now, you have chinks in your armor. And one of those things, a lot of times, is it's not always one of the main things, such as people not having a team in place or having a solid team. But we see that a lot of people aren't confident in their team players, or sometimes their team players are not managing their roles appropriately. And so when we talk to people that are saying, hey, look, I want to start a family office, I want to make sure that, I have right things in place. Well, just remember, you're the one starting that family office. Even if you're the trustee, you're still the manager of that family office. So management is key, and we can see that obviously a lot of people come to the vault because they don't have the management skills to manage, private entities because they've never been taught private trusteeship. That's fair. But when we get into the actual work ethic of the study of that and knowing how to implement that and being able to put the right people in place. Sometimes there's a dilly daddle, sometimes there's a drop off, sometimes there's an exposure, and a lack of knowing what to do next. And a lot of the times we get well, what is the next thing to do? And a lot of times, a lot of people already answer their own question. They know the decisions that they have to do. Now they know that they're exposed. They have to go out and make those decisions and do those things that would be changing, such as changing accountants, changing lawyers, going out and finding multiple lawyers, having a different mindset towards entrepreneurship and investorship, knowing that trusteeship is fiduciary. These are many different things that someone may say, oh, I'm not exposed to, I haven't been exposed to. And once you've been exposed, then your chinks in your armor will be exposed. Whether that, once again, it's not having a team. So a lot of times, a lot of people say, okay, well, I don't have a team in place, because I'm a transitioning entrepreneur. We get quite a few people that contact the vault that are transitioning entrepreneurs. A lot of people are dabbling their feet in it. Ladies and gentlemen, we're going to show you how you've been exposed. It's not that you've been exposed, it's your lawyer's been exposed, your accountant's been exposed. If they can help you with the things that the vault can do, they would already did it. And I think that's one of the biggest drop balls of the system right now, is that entrepreneurs and investors, sometimes we see a lack of taking a risk, and we all can improve our risk adversity as entrepreneurs or investors. But there's to a degree an employee mindset behind the entrepreneur. For everyone that's transitioned into entrepreneurship, everyone knows that has stayed on the side for longer than the statistical 1 year, 2 year, 5 year rule of business. 95 businesses going out of business, 95% of businesses going out of business in the first 5 years. The people that stay on for 5 years, they understand that they can't have an employee mindset. So you've been exposed if you're trying to be an entrepreneur, because it's truly trying to be, because an entrepreneur doesn't have any minimums on their income, and neither do they have maximums. They have goals. They have numbers that they know unconsciously that they have to hit. Just like somebody that has a job, unconsciously, they know how much their bills are. You ask the average person how much do their bills are a month, they don't know the exact numbers, but they can give you roundabout. So unconsciously, they have an idea. I got to make the money for this, I got to make the money for that, I got to make the money for this, I got to make the money for that. So it's a transition from truly just getting by, knowing how much you're supposed to make every single month, to abundance mentality, to growing mentality. Period. So if we get into the four keys of wealth, why do you think most people can't stand up for the four keys to wealth, which is to protect it? We're going to just say 95% of the population didn't get past protection. Why? Because they don't want to invest in their private education. They've been exposed that they don't want to invest in their private education to learn private trusteeship. Fair. If you don't know private trusteeship, you have to start investing in avenues that may state that they can do or actually do those things. And that comes from getting familiar with those sources. There are sources out there for private trustee training. Once again, we're not going to say that we're the only operation at the vault, but we know that other people's come with a hefty price. The vault caters to a demographic of people that are millennials as well as baby boomers, and so that is obviously a pretty wide range of trustees that enroll in the trustee training. People as young as 21 years old have enrolled in the trustee training because they understand the importance of legacy. They understand the big words, all the big words that the older people understand, and so okay, they understand those words too. They understand legacy. They understand cash flow. Some of them do. Some of them have gone to school for finance. So yes, some of them have gone to school for accounting. Some of them have gone to school for business. So when we get younger trustees that come through and say, hey, we're looking to help out our parents because our parents aren't doing their job as far as being able to provide a legacy for us via the situations that we talk about that are private, they invest in their education. So they get through to protection. Then we get to what? We get to the next part, preservation. You get a lot of trustees, they hear the heat of gold and silver. They hear the heat of the insurance. They hear the heat of it. A lot of the trustees that go through, they hear the heat of those things. Some of them have had family members that collect gold and silver, collectible art, cars. We've had trustees that go through that do cars, take cars that are old and actually fix them up and create appreciation vehicles for the entities. People ask, well, how do you grow capital? Well, you have to have assets. They acquired assets at obviously a dirt cheap price. They were able to sell the asset. Classic automobiles are considered to be assets. Why? Because they appreciate in value. They built it from no engine to having no paint to paint and engine and everything else along with it, running in almost mint condition as far as the run. But quality cars. So you see cars, you see collectible art, things of that nature. When you even look into the Epstein situation that we talked about in the news a little bit ago, you all can see where it talks about, even if you Google some of the articles about the trust and the 1953 trust, you all can see that there were collectible art that were passed along in these entities. So if you die, if this man died, where's the art going? Is it going to the public? Doesn't look like it. It's going to a private situation. That's called a private trust. Even if he has children, how many people know about the distributions? Did you hear of children fighting over assets right now? Not yet, but if that's the case, you see that there's an informed family. An informed family has entities in place. They had the structure in place. As soon as he passed, there was a not just a will, there was a testamentary entity in place. You all can look this up and see the value and the equity, and just that's a public scenario. So when you talk to the vote, this is private. But when you all look at that, that's still a great public example. This is what trustees get, ladies and gentlemen. They get the public examples. This is a public example. They get private examples as well. So enrolling in the private trustee training gives you a lot more uh, focus on private cases, private trust law, things of that nature. Those are the things that are priority as a private trustee. Whereas on the public side, you get a lot of this situation where you see once again the various forms of trust. But at the long story short is you know at the end of the day, are these entities public or private? That's the question you're going to ask yourself when you're looking to go forth in some particular manner or not. So that would be the case, but the Epstein case was still a great case to see. So once again, the exposure, everybody wants to skip past those two, protection and preservation. Where do they want to go? They want to go straight to trust growth. And then we get to the growth mindset. The growth mindset is perpetual. The growth mindset is abundance. It's no way around it. And so when you get in this space, it does stretch you. It forces you to go into places where you have to wear a suit and tie, where you have to wear a dress. We're talking private equity. You're walking into rooms where I mean, ladies and gentlemen, we're even talking about private equity now, where you're dealing with the IMF, the International Monetary Fund, where you're dealing with the World Bank, where you're dealing with HSBC Bank, where you're dealing with Swiss Bank, where you're dealing with different banks from around the world. Even governmental banks. Central banks, institutions. Those institutions give out capital for things. When recently we were sitting in front of an entrepreneur and they were like, yeah, Small Business Administration gives out money, and we were just sitting there like, well, they give out non-recourse loans, right? Those are ones sometimes you don't have to pay interest on sometimes, and even possibly pay back. When individuals contact the vault and say, oh, I know about the UCC, I'm trying to figure out the UCC and everything about the UCC, how come you haven't established a simple contract of revolving credit? You can do that. Banks do that. They use UCCs. We can show you that with the vault through private trustee training. That's public information because they're a public bank. Banks give out revolving loans of credit, and they utilize the UCC to do so. Why would they use the UCC? Because we already know, for the ones that are in that space, when we can break it down to the basics and the fundamentals, is dealing with creditor and debtor. They create a creditor and debtor public relationship. So, case one person defaults, they have a public record of it. People use those lines to... It's interesting that a lot of people don't know about how money is created. And maybe we'll say that episode for the children one day. But you are exposed is when you don't have a everyday growth mindset and asset appreciation. When we even talk about first protection, preservation, growth, and a lot of times a lot of people are exposed. They learn that they have to live up to the responsibility of protecting something. They learn that they have to live up to the responsibility of preserving something. So now, where does that say it's anything about me or my? Where does it say that? Where does it say it's anything about selfish intentions? And it doesn't say that. It says it's about what it says: protecting and preserving. And then we get into the growth mindset. The growth mindset, once again, everybody loves to be here for, quote, not everybody, but some people like being here for temporary periods. And then we have the elite trustees that they focus on truly building out. They just truly build out. You can see this in the public when you even see the CEOs of those companies that say they're not focused for shareholders. When we even reported and talked about how the bank CEOs were asked by Congress recently, should they have given their bonuses back when the housing market, the depression was going on with that, or the housing crisis was going on. They were the ones giving out the loans. And the Congress said, do you feel like you should give your loans back? And what did they say? I mean, should you give back your bonuses? And what did they say? I'm not in control of that. That is the board's responsibility to dictate how much money I get. Is that your situation? They were growing. Their pockets were growing personally. The company's pockets were writing off quote unquote depreciating assets called real estate. First of all, there's no year that can go by in real estate that probably is not depreciating. That's the interesting part. As much as it's an appreciating asset, which most people say, oh, it holds value, literally there are incentives and things of that nature that you can look into that real estate is depreciating. Why? Because the wood's getting older every day. It's getting older. Just the wood. It's getting older. It's depreciating. It's not getting stronger. It's getting weaker. So it's getting older. Depreciating. So many people in real estate, that know real estate, they utilize depreciation as much as they use appreciation. Growth. We can go back to even, okay, well, no, let's go to the next step. The next step is to pass it along. How do you pass it along if you don't have the knowledge? It's not about the money. It's not about where you start. It's about the knowledge base. If you have the knowledge base, you can build faster. When you have capital, you can build faster. But when you have knowledge on how to use the capital that you currently have and use it and build faster, obviously there's endless possibilities. And so now there's a situation where passing along the knowledge from one generation to the next is going to be the issue. And everybody that listens to the vault, quite a few have children, some don't, and they say, hey, I want to create a legacy. I want to pass something along. Well, let's look at this. There are quite a few educated people that have gone to secondary education that listen to the vault. They are familiar with endowments. They're familiar with the school being held up through alumni and things of that nature. And then there's other people that went to a public school and the school was named after somebody. Why was the school named after somebody? Because someone gave money to make sure that there was a school in that neighborhood via an endowment. Sometimes people's names are honored. Sometimes people pay to get their name on a school. It's sort of like recently where we saw the situation with LeBron James. Didn't he buy a school? What do? He bought a school. So he endorsed the school. He sponsored the school through the foundation. That's what happened. And so people can see that. That's how you preserve your wealth. You pass it along. How do you pass the wealth along? By making sure that it's not in your hands. Anything you own, you can be taxed or sued for. So he gave it away. He made money giving it away. Just like Robert Smith recently, they gave the $40 million to Morehouse University for the college students. He made money giving it away. How does he do that? He created an endowment in the form of a grant to create a scholarship for students. It's not a one-time deal for him. He's a billionaire. It's a tax write-off. So you get the passing it on now. And then he did it through charity. Both of them went through what? Schools. That's charity. Why? Because the public is educating you. See? The public is charity. And people got a public education. So how can you expect exceeding results in your financial growth in life when you've been given a public school education? You've been given the public information. That's called controlled knowledge. That was created through rich people. Do you see LeBron teaching people the extra millions through that school? It's a public education. Some people put their name attached to things for financial reasons, with a little hint of charity. Ring-a-ling-a-ling. Charity. for the children to have bikes and go to school and go home safely. Awesome. What we say at the vault is business, is not personal. So that's the case. Robert Smith did the same thing. He's a billionaire. He did the same exact thing. I'm not going to give it to a hospital, a local high school. I'm just going to give it to a college, create an endowment. He went to secondary education. That's why I mentioned to you all that the secondary education know about the alums giving back. Ladies and gentlemen, go check the record. Did Robert Smith graduate from Morehouse? No, he did not. No, he did not. But he gave some money away, and he got honorary documents. And now his family's gonna make money in perpetuity. That means forever. Just like Rockefeller, he followed a Rockefellerian principle. You make money giving it away. The largest still endowment, most likely with Morehouse University, is Rockefeller's endowment, because Rockefeller was, Morehouse was Rockefeller's pastor. That was the pastor's last name. So, just exciting times if you're in private equity. It's exciting times if you're in investing. A lot of you all have contacted the vault, have dealt with Cornell. Great shout outs to him. A lot of great people are studying, hitting the charts. We understand that it takes a grooming period, ladies and gentlemen. So a lot of you all that have listened to the vault for the trading, heard the trading webinars, you all that have done the trading webinars, it's a grooming period. Just know that when Cornell's been doing it for years, there are people that have been rock solid for years. So we look forward to seeing the results sometime next year, on a lot more solid players making it out of the webinars that were done this year. That was the first time the vault ever did the webinars with Cornell, and as far as through the internet, and just great results. A lot of people have gotten a lot of equity, a lot of value out of that, and it's just been a blessing. So just really excited about that. But once again, that goes back to being exposed. A lot of entrepreneurs do not have that high level of self-reliance to go into the market and be able to pull out money at any time. And that's something that is interesting to see, because that's what the trading really gives you. But you see, there's other elements that the vault provides. So just wanted to really talk about what's being exposed, even when we talk about the many things that people come to the vault with and ask the questions um, about these various different things. And you know, we always go back. We say, look, expose your own self to the if it's the lawyer or the accountant, expose yourself to them. Make them expose themselves to you. We get people that come to the vault and they always say, what should I ask? And you ask them. We literally had Cornell, and as we went to what is it, like I want to call it a seminar, call it like a workshop, and there was a lawyer that said that irrevocable trusts were a myth, man, and it's just so disappointing to see. Sometimes certain people give out bad legal advice, and it was in front of a lot of people. Just to say that, it was just so, it's just interesting to see, how some people can say things, and they're not always accurate. And by you knowing what you're supposed to know as the investor or the entrepreneur, you know it really changes the dynamic of those relationships with the accountants. You're interviewing them now. You're interviewing the lawyers. You're giving them a letter for hire. These are things that we were trained in private trusteeship. This is what you get even in the continuing education of private trusteeship, is that you're responsible as the trustee in private trusteeship. Even in public trusteeship, when people sit on boards, they're held responsible for, the office that they sit in. They usually call the first office, or, the board of trustees and things of that nature. So a lot of times people have been exposed with their education. Uh, oh, I have a public education. Oh man, I don't know what to do. Trust Christian. What do I do? I have a public education. Ladies and gentlemen, the vault has over 100 hours worth of content. It's best for you to go back and start there. A lot of times, a lot of people say, what could be a book that we could read? We say, even if we say go to the law library, there's still a great resource there to go to the law library and look for what is it that you're looking for to come more prepared. Or at the end of the day, when you come to the vault, then you understand that perspective that, hey, I need to have the mindset of true uh, learning, wanting to learn the subject matter, having a ferocious appetite towards the learning. Because so many people they say, uh, I wanna go private, but a lot of people think they're studying. You don't need to study all that information in private. A lot of information in the public is really just a distraction. It's like public media, news media. It's just you listen to it and you hear, okay, this may or may not be true. This could be fake news type deal nowadays, all and which has always been true. But you hear this term thrown around and you hear all of these terms and you're like, oh wow, this is an interesting market that they have out here nowadays. With the markets talking about there's fake things being reported. And so now you live in an age where you have to really build a high level of relationship and trust, and that's why the vault's always been focused on trust, is because obviously it just rings all the way through. You have to trust the parties. People even contact the vault, hey, how do I know I can trust the vault? Ladies and gentlemen, you can either turn the combination and get the consultation, or you can keep moving about in your life and enjoy the aspects of what you want to do. The vault has always been about building relationships with the base that listens. Why? Because it is truly about wealth management. Wealth management comes with families. Wealth management comes with communities. Wealth management comes with talking about a different level of just business and things of that nature. Because it's not one business and one portfolio and things of that nature. It's a very diversified portfolio. When we talk about wealth, a lot of people say, "Oh, entrepreneur, entrepreneur, entrepreneur," but we even transition and say, "Let's talk about investorship," because investing is a business, and even as an investor, you're still doing business, and so it's very important to have a very focused business mindset, and that's something that we love to talk about at the vault, is the mindset of investing, the mindset of entrepreneurship, the mindset of a private trustee, and doing private trusteeship. That's the most exciting aspect of the vault and what we love doing here. And people say, oh, what about the people that have gone through the trustee training? Think about it. People say they want to go private, so why would we ever talk about them? That's the best part about the vault, is what goes in, and that's the best part about it. The vault has provided that level of care, because people get what they pay for. Ultimately is you investing in yourself. And when we say you invest in yourself, it's a defeating mindset sometimes to even say that, because really it comes down to your family investing in you. The people previous, your parents, but sometimes they didn't have things set up. And so now it's incumbent upon you as a trustee, to get the job done of the family trust and the family estate. And sometimes it just is obviously going to be very non-heir apparent. Why? Because traditionally in the states, there's the financial education is very limited. We were sitting in front of a insurance guy earlier today, and he was talking about how the private is not taught in the public, and of course it's not. Because we say, hey, look, we can go to public websites, and all they're going to talk about is LLCs, S corps, and C corps. They're not going to talk about private trust. They're not going to talk about private family foundations. They're not going to talk about a lot of the different GPs and LPs that you're able to do, um, based off of your movement with your structure, or being able to assemble a team and things of that nature. So private trustee training is always exciting to really get in front of people that have that mindset. Once again, the protection, the preservation, the growth, and the pass it along mindset, because that's through and through the ones that are going to stick, the ones that are going to make it through the process. Everybody says, what's involved? It's you making it through those four levels, and you actually literally you, and if you have a partner, spinning those four oars in the water all the time, spinning those four oars. It's truly focused on business and family mindset, business family growth mindset. It's definitely run like that. We know that if there are certain cultures that don't come from true family sticking together, sometimes family are very fragmented in the states nowadays. But at the end of the day, the entities trust force you to, even when people say, oh, we always get these sole entrepreneurs, or these entrepreneurs that are doing it by themselves. Everybody's doing it by themselves. I'm gonna tell you right now, if you're doing it by yourself, you're gonna lose. There is no entrepreneur that does it by themselves. And we've seen this time after time after time, and they failed, and it's like smoke. They're like smoke. They spin a lot of their wheels. It's spinning their wheels. This is what they do, ladies and gentlemen. They tell you how big they're going to be in the business. They're going to tell you everything that they're going to do in the business. But what happens when it comes to action? When it comes to you filing a $300 document to open up a LLC or a C corp? When the rubber has to meet the road for the corporation, so you can open up the businesses, so you can do business in a proper fashion, instead of people doing business with the personal. That's the issue. When we talk about people trying to say, oh, we're going private, they haven't even opened up the first level of business. How do you do it? It comes from protection. Protection comes through separation. Did you separate the business from the personal? It doesn't matter if it's public. It's just separating the assets. But most people don't even know what the greatest asset is in the beginning of opening up the business. Ladies and gentlemen, what did we just say? We were sitting in front of an insurance guy today. The insurance guy. Because you gotta, key man. If it's not key man, we don't just say key man. We talk about those styles. Because everybody thinks, oh, I'm going to get a little bit of information and run off and go do my own thing. And once again, that's a selfish mentality. That's a job mentality. That's actually an employee mentality. When we talk about entrepreneurs and investors, the big ones, the ones that make moves, we have teams. You have a team. You have partnerships. You have to continue to grow partnerships. When people say, oh, investing, you have to have all these different income streams. Okay, so what do you think? You're going to have one or two, just three relationships? There might be more than that. And we're talking to a certain style of entrepreneur, a certain style of investor. We see that mindset is there. It does involve you getting out your comfort zone. We're not talking about faking it till you make it. We're talking about you going in those environments and knowing exactly your industry and what you're doing and what you provide to the marketplace. Actually providing something to the marketplace, not reselling bootleg goods. Creating equity in the world. So it's a different mindset. Definitely a different mindset. But exciting nonetheless. And we talk about that investing and the education, and so many people, they're not going to make it because they don't want to risk losing some measly bucks. Think about it, ladies and gentlemen. Whether you all know it or not, whether we told you that your private education is actually cheaper than the public ripoff that puts people in debt, that literally abscond from debts because they feel that their degree and them going to school is a waste of their time. So now they're not trying to pay their student loans now across the board. The people that went to school and don't want to pay their student loans, if they literally, those people, or people in general that invest in their private education, private wealth conferences, private trustee training, different environments that put them in a higher level of entrepreneur or investor that forces them to grow their wealth mindset. If they knew that it was actually less expensive than a $100,000 education, the initial start to make over 100K, the initial start, and if they knew that the initial start was less than 50K, you find a resource such as the Vault, or you find Cornell, you find certain people that they say, okay, yeah, we're about it. 50K? Okay, fine. 100K? Okay, fine. So many people say they want to be a millionaire. How are you going to be a millionaire? You got to make $80,000 a month minimum. That involves stretching. And that's just growing a company. That could be a lot of debt. We see business owners, oh, the business is $1 million business. Yeah, that's true, but it's really not. You think you're going to talk us on $1 million in equity when $800,000 of the company was truly expenses on buying merchandise, selling merchandise, buying insurance for the company, buying these things for the company, paying employees, all these different expenses, and then, okay, the entrepreneur came out with 150K. That's what the $1 million business looks like, whether you all know it or not. I want $1 million business. People say they want $1 million. Well, then you have to have more than $1 million business. But when we see the entrepreneurs that have the $1 million business and then they're clearing 200K or less, they grossed over, 800K, they grossed over a million K, and then overhead comes, expenses come, good lawyers come, good accountants come, don't they? So exposed is investing and knowing that you don't know what you don't know. And maybe sometimes, people get that mindset of we sit in front of entrepreneurs all the time. A lot of people look at, Trust Christian, they say, oh, you look like you're like 13 years old. You look really young. How did you obtain, the trusteeship knowledge? And, we just let them know you invested in private education, got around private community, got around private mentors. It's just that simple. And, it's never been a shy of not investing second, always willing to go back and invest, uh, because, that's what got the journey really moving forward exponentially. And that was awesome because it wasn't public, it was private. So, when you all see alternative classes, a lot of people say, I don't know how to do this, I don't know how to do that. Well, there's so many alternative forms of education nowadays, business education, so many different styles of education that are available, that are a lot more specific, a lot more current, very pertinent to your situation. A lot of, if we're under the same understanding and clear that the states does not have a education traditionally in the public that teaches finance, so there's a lack of a financial education there for most people. But sometimes a lot of people don't, when they know that, then they know, okay, well, I didn't have a great financial education, but then they end up getting more of a public financial education. So you get a lot of the public things, the IRAs, the 401ks, you get a lot of those tax deferral. You have to research deferral, but you know what deferral means. And when you know deferral, we go through, okay, well, why we want to be in those positions. So there are transitions in mindset, but the ones that say, oh, we're going private, you know okay, you're going private, you've been exposed. You might not be able to say, okay, I can completely go private, but what are you looking to grow? How many people come forth with their goals, with the entities that the business that they're actually looking to do? They just want to go private. They don't have any business that they want to create. They don't have any business that they want to really execute. And these are the transitioning entrepreneurs, the ones that say, oh, I'm looking to go from public employee to private trusteeship. Well, I mean, you're not going to make it on this side. I would love to be a little bit more fluffy, but on the private side, it contains entrepreneurs and investors. It's sink or swim over here. There is no come back here and cuffing it. You know, uh, but for everyone that is a trustee, or entrepreneur, it's always awesome to deal with people that have something to lose. Um, we obviously got to protect it. We got to preserve it. And we got to pass it, grow it and pass it along. And so that's always the awesomest part of being exposed, is that you have to just keep going through the same system all the time. You just keep pounding the same system away, just like we pounded the public system away. Now we just pound the private system away. You do have to change your association. Why? Because you're private now. You changed your association by going private. You thought you were going to keep all your public associates and friends. You're private now. Some people aren't really truly committed to making that that transition, so they get exposed. You know. And so we just really look forward to the consultations, and hearing from trustees, um, and just everybody that contacts the vault, whether it's consultation or trusteeship. This is actually the last week for enrollment. We went 4 weeks after uh, the class starting, so there's a makeup period of you listening to the classes that are already there. But at the end of the day, that's up to you all. But for sure, classes are closed after that. And we really like running with a solid group for the remainder of the last 8 weeks. It's a 12-week course, so it's a 12-week trustee training course. Trustees are enrolled Enrollment is up until the first 4 weeks are up, and then we're moving forward with the group, and we're solid. The numbers are solid. Enrollment was up, which we were happy about, but at the same time, we really have a good core group of trustees and trustee training. And it's always good to hear the growth mindset. I always want to hear the learning and all of that good stuff, and that's what it's all about. Is people being exposed to information they can say, "Oh wow, I was never exposed to that law," wherever that was. And that's the really one of the most important things is just being exposed to that information, exposed to the different environments, exposed to uh, what have you possibly may have never have gotten if you necessarily, just like we say, just didn't invest your time, didn't invest your money into the private sector. The private sector is opposite of the public. Public's got a lot of regulation, public protection for general welfare and things of that nature. When you get into the private, it's just definitely a lot more unregulated and hang loose. And but there's still rules in the private. And so being exposed to those things, it creates a lot of excitement for a lot of the new trustees and people. So just really excited about that. Thanks, AUIG, for tuning in, Chaz for tuning in, JT, Team Well Builders. Appreciate you all. Uh, so thank you all. But let me say, this is an episode that just really wanted to talk about even the people that you trust around you. You know, Think about this, ladies and gentlemen. If you cut a check to a lawyer or an accountant and you say, "Hey, come sit down, I want you to listen to this young man," or "Sit down, I want you to come listen to this guy, I want you to tell me, can you do this?" And they don't sit down and listen, they've been exposed. They don't have a student mentality. They don't have a humble mentality. They work for you, you know that, right? Fired. I didn't tell you to come argue. I told you to what? Listen. I didn't ask you to ask stupid questions. I asked you, can you do it? What this young man or what their program is talking about. And that's how you expose your lawyer. And that's how you expose your accountant. But a lot of times they get exposed and people run back to their lawyers and their accountants. That's great. Those are the people you trust, and stay in trust with them. If they could do what the vault was going to do with the trustee training, guess what? They would already did it. Why didn't they do it? Because there's a difference between public and private, and we're one of the few programs that are actually over the internet that are truly private trustees that have been trained privately. Everybody hasn't been trained publicly, privately. Of course they haven't. Why can't they specifically talk about a system? Why don't they even tell you the system? We could tell you the system. We sat in front of the insurance guy today. There was no holdback on the system. There was actually some proprietary shared. Why? Just to tickle their fancy and just let them know, hey, you're sitting in front of somebody that has something that you've never seen before. Literally drew something out you've never seen before. You never have seen it before. And they're dealing with insurance policies with people that are doing millions. So, it's exciting. Greetings, Sean. Thanks for tuning in live. So, trustee training is going last week for enrollment. Excited about the trustees that are going. Uh, it is something that we enjoy doing. Trustee training has workshops attached to it. We're actually working on one right now. And we used to do them where people from the public could come in. We like focusing just on trustees now. People that have gone through the webinars where Cornell traditionally go, people that have gone through trustee training traditionally go, and that's something for trustees. It's built into the program. A lot of people always want to shake the hand and meet the people and really talk about the community. We haven't talked about the community in a while, but the private community, that's on everybody. That's on themselves. Everybody's at risk once again. But we don't expose people like that. So when we talk about you are exposed, we don't expose people. You're exposed because you say, I have a trust. You're exposed because you say, I own a business. You're exposed. As soon as you say that, somebody's thinking about suing you because you have something now that they can take. You're exposed. But in the vault, we really have a different mindset. And the vault really talks about that with trustees, goes through that, and really excited about that. Because those are some of the more superior positions and exciting things to talk about. So, when the vote talks about trustee training, that's what it's all about. It's trustee training. You are a trustee. You hired a lawyer. You hired an accountant. There's no way around it. The trust hires the lawyer. The trust hires the accountant. You think one company has one lawyer or one accountant? No, sometimes you might have multiple. But guess what? You're the one in control of seeing who comes and actually can get the job done. And it's interesting. If you guys really do your research, ladies and gentlemen, with the Epstein case, they even talk about the lawyers that supposedly put together the private trust and the private will. You all can go look at that. When everybody says, when we always talk about go find a private attorney, see how much their prices are, we actually encourage you all to Google their names, contact them, and see how much their prices are. And when you come to the vault, now you know why you're coming to the vault. Some people don't get on the phone unless it's $30,000 an hour. We appreciate you all for tuning in live. So when your lawyer isn't $30,000 an hour, they have some room to learn. Because in the private, there are lawyers that are making quite a bit of capital. Like the CEOs that are sitting on Wall Street. Who do you think's helping the CEOs on Wall Street sit there? They're protected by lawyers that have revolving lines of credit through the UCC. When we sat in front of even an insurance guy, they get securities license. So that's why you need those people. You do protection through securities. But you're in trust, like most hedge funds, like all hedge funds. Most hedge funds, not all. You've been exposed, we're going to end on this. You've been exposed when you're trying to give your money away. When you're trying to grow the trust assets by giving the money away to someone else that's truly not a perpetual partner in capital returns. When we talk about perpetual capital returns, we're talking about colleges. We're not talking about giving a loan out to a friend. We're not talking about giving what are some more micro issues? We talk about micro issues as well as macro issues. Most of the time, even as an entrepreneur, most people give money away to somebody that's starting a business. Oh, I'm going to give my money to my friend because he's starting a business. Yeah, okay. And when he fails with the money, because this is his first business, and he's a part of the 95% that fail in the first year, what did you just lose? Money. What did the trust lose? Money. I thought we were here to protect, preserve, and grow. So why are you giving money away? Well, because, he had a business. It was a good idea. Well, okay, that's a risk. You're aware of the risk, right? Right. You're okay. You're willing to risk it all on that venture. That one venture you're willing to lose. Whatever you got in, you're willing to lose it. And most of the transitioning entrepreneurs are not willing to lose what they have. But they still give it away. Sometimes they lose it, sometimes they don't. But they're exposed. Why? Because when the money doesn't come back on time, they're upset. You think the bank is upset that you don't have money in your account when they get hit with an overdraft? No, they hit you with a fee. But instead, someone that is not a traditional lender, that doesn't know, fair credit and lending practices, what happens? You get exposed. Oh man, I don't know if I could do that to my friend. Put interest in usury. You know what I mean? You know, people come to the vote and say we don't want to do usury. Okay, that lets us know you're not operating with a public bank, because public banks have interest. And if you don't have the money in the account and there's an overdraft, they're charging interest. So we see a lot of entrepreneurs or people that consider themselves investors, and they're giving money to businesses, and they're a newbie entrepreneur, they're a newbie investor. And we just say, hey, you might want to look into, doing some things. We were talking to an insurance guy earlier, and he was talking about just the general term of being a financial advisor or a financial planner. Oh, we can talk about them too. We will. We talk about lawyers and accountants. We're going to talk about the financial advisors. All these different terms going around, but who's being exposed? The financial advisor that makes less money than you? You're sitting in front of a financial advisor, someone that's literally looking at a computer, putting in numbers, and giving you equations to help you manage your portfolio, which is called averages. The stock market and the averages. They're giving you average returns. Because who comes with them? Average people. Average investors. You usually just can put average in front of whatever term you want to give them. They're an average financial advisor. Most people have average lawyers. Most people have average accountants. What's the difference between your uncle and that guy does, he can do TurboTax and H&R Block? Average. What happened to seeking out the elite? What happened to seeking out the best? That's trust growth mindset. At one point, we have to leave old ventures behind. If you transition from your job to an entrepreneur, why did you leave your job? Because you wanted to make more money. You wanted to be in control of the money. That's why you left your job, to go be an entrepreneur. You wanted more control. Whether it was over money or over time, you wanted more control. You wanted to grow. That's what it's about. The best. In everything that we do. So a lot of self-development, a lot of fine-tuning, excitement there, but nevertheless, still just focused on, uh, when you get in trustee training, it's always a holistic approach in trustee training. There's never just an approach towards one thing. This is the way you have to do it. We always tell people you don't get creative in creation of the entities. You always get creative in them. You get creative. You have to grow, you have to preserve, you have to meet the right people. We talk about those people, the titles that are a lot more exclusive and efficient, and even some of the environments that are more necessary and applicable to a state. And that's maybe the biggest thing is people have been exposed that they're not thinking about their estate and they're thinking about making money right now. A lot of entrepreneurs are looking for money right now. Why? Because they were an employee. They were tired of making money part-time. They were trying to make money full-time. They were trying to make money whenever. A lot of entrepreneurs, they want to make money right now. Well, guess what? Why do you think Epstein did that? Epstein, he had all the money. He grew all his money. And then when he died, what happened? The money went in the right place. Is your situation going to work out like his? And he transferred 573 million, and we haven't heard of a tax liability yet. That's the difference between a private education and a public education, and actually investing in it. Epstein clearly, obviously, had enough information to literally name a trust 1953 trust. Think about your birth year. Think about if that year's taken already. That's so hilarious. The name of the trust is actually called the 1953 trust. It's never been taken. They obviously had the EIN for it, and literally, that was the name of the entity. It's interesting. Across the board, when you get in private trusteeship, you see a whole nother world. Guess what? He didn't transfer anything in his name. He went through the 1953 trust. Tax free from what it looks like right now. And people gonna work their whole life for $32,000, for $80,000. This man just transferred $500 million plus. How do you get the $500 million? By paying taxes? It doesn't look like he's doing it at his death, so he probably wasn't doing it during his life. We appreciate you all for tuning in live or listening to replay. Peace and blessings. Reach out, Christian at Trust Christian. You are now tuned into the vault. Trust Christian, know nothing, control everything. Thanks for tuning in. Peace.